Another company has halted testing this week for the vaccine. Operation Warp Speed was put into place to quickly find a vaccine for the pandemic we're in. How does this stoppage affect the company? Should you still buy it? Better yet, what companies are pushing forward and coming close to a vaccine? Most importantly, which companies can you buy that will make you some money? Here's a quick question. How comfortable are you with the testing methods to get the vaccine to the American people? Answer in the chat. Johnson & Johnson coronavirus vaccine trial is paused after an adverse event in a participant. Interesting how Operation Warp Speed is out there to help us to get very quickly to a vaccine for the pandemic. This now makes the third company that has shut down or paused its vaccines. We had Johnson & Johnson. Prior to that, we had AstraZeneca. And then the next story is Eli Lilly. Eli Lilly's COVID-19 antibody trial paused over safety concerns. So I have a question. How comfortable are you with the standards that are being used for Operation Warp Speed to get to a vaccine? Companies like all of these pharmaceutical companies, when they're coming up with any drug, has this happen? Why is it more publicized now? Because we're in a pandemic and a lot of people are leery about whether or not they want to take a new vaccine for the COVID-19 without as much rigorous testing that is normally done in regular situations. This is a different situation going on, folks, right? We're currently in the midst of a pandemic, and the government has sanctioned Operation Warp Speed to get the vaccine out. But I like that, whether they had to do it. They had to come out and say that this is happening, that we're putting out the antibodies, we're putting out the vaccines, they're affecting people adversely. We got to let the people know. Phase 3 trial of Lilly's Active 3 monoclonal antibody has been ordered by the FDA. So the FDA is still, of course, involved to pause over safety concerns. The news was first reported by the New York Times. And the company was confirmed to CNBC. We are aware that out of an abundance of caution, the Active 3 Independent Data Safety Monitoring Board has recommended a pause in enrollment. It's slumping on the news, now down 2.8%. That was a couple of days ago on October 13th. Its shares have moved higher by 1.16%. So these two companies have had to halt their vaccine trials because of some ill effects. But on the other side, let's talk about the companies that are moving. Pfizer and BioNTech may be the first to show efficacy of the COVID-19 vaccine. BNTX, a partner of Pfizer, haven't had to stop their late-stage COVID-19 vaccine study over safety concerns. So this is on the other side of the coin. BioNTech CEO Ugur Sahin told Bloomberg after publishing some data that they used to narrow their candidate from a slate of 4 contenders. Because they're structures of a trial, the companies had first disclosed early results of another vaccine, BNT162b1, in July. Investors had been optimistic about its prospects, but after comparing data, the firms decided instead to pursue another candidate, 162b2. BioNTech and Pfizer are still sticking with their previously announced target of being able to provide preliminary data on whether the mRNA vaccine works as soon as this month, October. Interesting. If a threshold for the infections is reached, any submissions for regulatory approval would come later. So there's 2 companies that are moving ahead because they haven't had any roadblocks, and then 2 companies that had to pause because they did have roadblocks. All right, so let's take a look at these companies. AstraZeneca is not in my list today, but I did put it in my list today, even though it wasn't one of the stories today. Let's take a look at them. There's Eli Lilly. There's Johnson & Johnson, BNTX, there's Pfizer and AstraZeneca. So remember, the three companies that did have to pause because of roadblocks of bad things happening to people were AstraZeneca, Johnson & Johnson, and Eli Lilly. But let's look at them. With today's price activity, BNTX is nicely up about 1.5%. Pfizer, AstraZeneca down, Eli Lilly, and Johnson & Johnson. Let's do a real analysis. So the news is out there. Now I'm going to use the power of the VectorVest software to put out real analysis, not speculation on what I think the stock is going to do or whether I think the stock is a long-term hold or not. I'm going to let the software, the power of the software, answer that question. We assign a value to every stock every day. Value looks at what we think the stock is worth. We look at things like earnings. Earnings is the thing that moves the stock's price the most. We look at earnings growth rate, amongst other things, as a VectorVest proprietary indicator. The two things that I do know is that it does look at earnings and earnings growth. So right now, Eli Lilly is worth $186 and trading at $145, where our mantra is to have you in safe, undervalued stocks that are rising in a rising market. So Eli Lilly meets the first thing. It is undervalued. Johnson & Johnson has a value of $178 with a price of $147, currently under its value. Excellent. BioNTech, on the other side, is valued at $6 and trading at $88.23. Aha! Now, because a stock is clearly over its value, does it make it a bad stock? The answer to that is no. It means that there's perception behind the stock, that people are investing in it, driving the stock's price higher. They're willing to pay a premium to own the stock above and beyond what it's currently worth. That's not a bad thing. All right. Pfizer's got a value of 34, a price of 36. Well, the stock is what we're going to consider to be fairly valued. We look at AstraZeneca, trading at 52 with a value of 28. The stock is clearly overvalued. But again, because the stock is overvalued doesn't make it a bad stock. Now, let's look at the proprietary indicators that we have within VectorVest. Relative value, RV. All of these indicators I'm going to talk about now are all cast on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. Relative value, 1.47 on Lilly, above the value of 1. We compare the stock from a relative value standpoint. We compare the stock to a safe investment in a AAA corporate bond. You buy a bond, after it matures, you get all of your money back with a small interest rate. It's a safe investment. So you hold a bond in knowing that after it matures, you're going to get your money back. Safe investment. Not gangbuster. Doesn't run up or run down. You get your money back. All right. Eli Lilly. If I had to compare Eli Lilly to owning a AAA corporate bond, I'd rather own Eli Lilly longer. Why? It's got a relative value of 1.47. Tells me, one, it's above the value of 1, it's favorable. Eli Lilly should outperform that AAA corporate bond by 47% over the next 1 to 3 years. I'd rather hold Eli Lilly as opposed to that AAA corporate bond. Johnson & Johnson, above 1. Johnson & Johnson should outperform that AAA corporate bond by 15% over the next 1 to 3 years. I'd rather own Johnson & Johnson. BioNTech, on the other hand, has got a relative value way below 1. What does that tell you? This is a news-driven stock. What kind of person invests in a news-driven stock? More of a speculator or a trader or a shorter and more so of an aggressive trader. The upside potential is not there with the stock being overvalued. All right? That's real analysis. Okay? Pfizer. It's got a relative value at 0.92, below the value of 1. Long term, I'm not sure if I really want to hold on to Pfizer long term, and the same thing with AstraZeneca. Now, many of you will say, well, wait a minute, Pfizer and AstraZeneca have been around a long time. Absolutely. But when I can see if the stock is over or under its value and looking at its upside potential with relative value, it gives me the news or the information I need to know, not what I want to know. Well, it's up. It's been around for a long time. Absolutely. But from an analysis standpoint, a AAA corporate bond, that safer investment should outperform both Pfizer and AstraZeneca. Let's look at the next indicator, relative safety, the stock's consistency and predictability of financial performance. It's also an indicator of risk. Relative safety below 1 tells me the stock is more riskier to own. Eli Lilly's got a relative safety above 1. It's a nice, safe stock that consistently meets or exceeds its earnings expectation. Johnson & Johnson at 1.29, a good, safe stock that I wouldn't mind owning. BioNTech, upside potential is not there. Relative safety is not there. The fundamentals behind the stock are not there. This is news driven. And as long as you know that and you still buy it, you understand that you trade it a little differently than a stock that you're trying to hold long term. Pfizer, safety at 0.96, below the value of 1. Fundamentally, the stock's fundamentals are not there. AstraZeneca, interesting that it's got a relative safety above 1. So it's not nearly as risky a stock, but the upside potential is not there. Who plays a safe stock? A long-term safe stock would be a long-term investor or a retirement-minded person. The stock consistently meets or exceeds its earnings expectations. I keep that in mind. The last thing is the stock in an uptrend. Relative timing will tell me that. Eli Lilly, 0.78, below the value of 1. Eli Lilly right now, even though it's fundamentally sound, it's not in an uptrend right now. Johnson & Johnson, even though it's fundamentally sound, not in an uptrend right now because RT's below 1. BioNTech, fundamentally not sound, but in an uptrend. Man, that adds more credence to the fact that this stock is more of a trade stock. And because you now have that information, not just looking to see that the stock is up today, but you have the information that the fundamentals are not there and it's going up, this is a trade. You play it like a trade. Pfizer, not going up in price right now. RT is at 0.87, below the value of 1. AstraZeneca, not going up in price right now. RT is at 0.80, below the value of 1. And then we look at putting all three indicators together into VST. What's got the best combination of all three? Looks like Eli Lilly with a VST of 1.19. Now, a couple other things. One, earnings per share on Eli Lilly is good. They grow their earnings at a clip of 19% a year. Man, fundamentally, I love the stock. It's below its value. What's hurting it is that it's in a downtrend right now. I look at Johnson & Johnson, $8.76 earnings per share. They only grow their earnings, though, at a clip of 1%. At least it's positive. Look at BioNTech. We already know it's a trade. Look at their earnings, negative 51 cents, negative 9% earnings growth rate. If that doesn't add more to the to understanding that this is a trade, I don't know what else can. All right, looking at Pfizer and AstraZeneca, both growing their earnings at a clip, negative percentage. Folks, when I say we analyze stocks, I ain't just whistling Dixie. We do a true analysis on any stock in the database that you want. And as a matter of fact, Joey will put a link in the chat box. If you want a free stock analysis report on any stock that shows you this kind of information, click on that link. Put whatever stock you want that we track. You can get this kind of analysis on any stock. Let's go right-click, view the stock graph. Let's go peep them out real quick. Put them on a 3-month graph. Eli Lilly, what did I tell you? Fundamentally, it was sound. What's the stock's price doing? Going down. I like the stock. The stock's got a level of support sitting at 143.31. Let's see if that level can hold. If it doesn't hold, it's got more downside. RT tells me the stock's in a downtrend. I already told you that, right? Before I even looked at the graph. Fundamentally, the stock is good. Right now, it's caught up in a downtrend. I've got a 20-day exponential moving average price below it. Let's go to the next stock. Johnson & Johnson. Fundamentally sound. RT tells me the stock's in a downtrend. Boom. Look at it. Below the 20-day exponential moving average, RT below 1. Now, somebody will say, well, look at the stock ran. Man, yeah, it did. Was it confirmed by relative timing? No. What did the stock do? Continued to fall. Yeah, folks. I'm going to tell you that there's nobody out there that does what we do. That RT is a very smart, fast indicator. When I'm looking to see if a stock is in an uptrend or not, that RT needs to go above 1. That's a more solid uptrend than this peak up here or this peak up here. This is the information that you need to make the right decisions. All right, what else is in here? BNTX, not fundamentally sound, but what did I tell you was helping it? that it was in an uptrend. Boom. Stock's above the 20-day exponential moving average, moving higher. Big down day yesterday, a little bit of a bearish engulfing. No follow through today. This is a trader stock. And because you have that information, you know that you trade it short term. Next stock, Pfizer, in a bit of a channel from the high, still trending lower. RT below 1 is currently above that level of a 20-day exponential moving average, but still within the bounds of a level of resistance at 38.11 and a level of support at 35.38, sitting in a channel. And last but not least, AstraZeneca. Remember, Pfizer and AstraZeneca have been around for a while. I'm looking at a graph that's telling you maybe this is not the right time to be in the stock. The news is out there. I did the analysis. We're now backing up with a chart of the stock. So that's analysis. All right. And for anybody who tells me that, well, you got a stock that's trading, at blah, 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 or values at blah, 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 I've walked you through the analysis of being able to make a better decision. All right. Do we have any questions? While we're putting in our questions for the story, if you do want to follow me on social media, check at Glenn Tompkins Jr. on either Instagram or Twitter, at Glenn Tompkins Jr. Anna says, can you get all these charts in the mobile app? The answer to that is yes. So Anna, if I've got the mobile app, I can pull up the stock right on my phone and look at the graphs and look at this information like RVRS, RT. And you know something? Not every stock is a long-term buy. And what VectorVest shows you is what stocks aren't a long-term buy. And if you say, well, I bought that stock and I lost money. Well, one, are you a trader? If you're not, then why were you in a trading stock? And if you're a long-term and you say, well, I lost money on that stock. Well, why? What kind of stop did you put on? Did VectorVest say it was okay to still be in it long-term? Is the fundamentals good? And if you answer no to those questions, why were you in that stock? This gives you straightforward information. Does the VectorVest software have recommendations for maximum price to buy? When you say maximum price to buy, no, everybody. So when I'll answer the question this way, when a stock's price is going up, all right, and you're thinking about getting into the stock, if the stock is less than $20, I'm going to tell you to put in a buy stop order 5 cents higher than the high. All right. If the stock is greater than $20, I'm going to tell you to put in a buy stop order 12 cents higher than the high. Both of those means are helping you to get into the stock as it's rising. That's always important. Before you pull the trigger on any stock, you make sure the stock is rising as you buy it.